My name is Keith Hall. Welcome to another NASE Minute. Today I want to talk about your new car. As we do seminars across the country, tax planning seminars, long-term business planning seminars, one of the questions that comes up over and over and over again is, should I buy my new car or should I lease my new car? Now, typically the question comes from a tax situation. The question really is, which of those two methods, leasing or buying, gives me a bigger tax deduction? Most people believe or have heard at the water cooler that leasing your car will provide a bigger tax deduction. Now, the key point for this minute today is to recognize buying versus leasing is not a tax decision. At the end of the day, the tax deduction you have for the business use of your personal vehicle is going to be about the same. So don't let leasing versus buying be the key decision. In fact, the most common method for determining the deduction for the business use of your automobile is the standard mileage rate method. The way that method works is you calculate your business miles, multiply by the standard rate that the IRS gives us, and that's your deduction. So whether you drive a Mercedes or a Ford F-150, whether you lease, whether you buy, none of those things even come into the calculation. It's 10,000 miles times cents per miles, and that's your deduction. So it's exactly the same. Now, if you use the actual expense method, it can vary differently, but at the end of the day, it's basically the same. So do not let it be a tax decision. So how do you decide? Number one thing is the underlying financial cost. Now, if you buy the car for cash, that's always a great idea because you don't have to pay interest. Most of us don't have the ability to pay cash for our new car. But if you buy the car, look at what the finance rate is. If you lease the car, remember that there is a finance rate embedded in your lease payments. So look at that total financial impact based on the underlying finance rate. So how can you choose which is better for you? Now, typically, if you drive the car a lot of miles, so you drive a whole bunch of miles each year, maybe you're a real estate agent, so your business is in your car, you drive lots of miles, and you typically keep the car for 10 years, 7 years. You keep a car for a long time. If you drive a lot of miles and you tend to keep the car, buying the car will almost always be less expensive. If, on the other hand, your personal habits are you trade cars often, you like the new car smell, you like upgrading, so you trade cars every 2 years or 3 years, and you typically know how many miles you drive each year, so you drive average or less than average miles, typically leasing will be better for you. So kind of to summarize, lease versus buy, if you drive a lot of miles, leasing is less effective. If you drive only a few miles, leasing works very good. If you trade a car every couple of years, leasing is good. If you keep a car for a long time, buying is going to work better. And if you drive a lot of miles, then buying is going to work better. Okay, so put a pencil to paper, figure out what that finance rate, what the overall cost is, and keep in mind that lease versus buy is not a tax decision. Now, if you need more detail, that's what we're here for. Bookmark our website at nase.org, and always remember, you're not alone.